Nigerian investors are setting their sights on the Treasury Bills Auction today, barely 24 hours after the 50 basis point rate hike by the Monetary Policy Committee. Kinskin Ukeje, a Treasury Team Member at Access Bank, joins me now for a market discussion. Thank you so much for your time today, Kinskin. Before we get into that MPC conversation, I understand that the T-Bills auction is going to be on the way today. Let me get your thoughts on what to expect.
Thank you so much. Thanks for having me. Today, the DMO will be offering 277 billion across the 91, 184, and 364 tenor maturities. We expect a fair subscription on that auction, not as oversubscribed as we used to see in time past. And we expect a marginal increase in rates.
All right, on the MPC decision, was that in line with your expectations? And let me get your thoughts on the likely impact down the line.
Yeah, the MPC decision was in line with our expectation. Our expectation was a marginal increase, which they did, and 50 basis point increase from to 26.75 levels. Yeah, and also we saw an adjustment in the asymmetric corridor to plus 500 basis points and minus 100 basis points. It was well in line with our expectations in the market.
Yeah, because looking at inflation at the rate where it is, in your estimation, do you think we've seen the inflation peak? And also, I'd like to get your thoughts on how the market is going to strategize in terms of what we've seen play out outside our shores with the US Fed and the ECB more or less looking to change their strategy.
Yeah, for the inflation, I expect it to peak. We are approaching its peak, given the base point, and we should expect a marginal reduction going into the end of the year for the inflation. And in terms of the alignment with the US Fed and all, I do think we're positioned, given the MPC, for the management of the monetary policies.
All right, but looking at the DMO's strategy now, looking to play more with the domestic investors, I'd like to get your thoughts of that implication of the higher interest rate environment and what it would mean for the markets here.
Yeah, the GMO playing with the local investors, we will just see, given that also the banks are also raising capital and also it's the same liquidity that is still going around in the system. So we just expect to see how the subscription will go to the end of the year. I do not think it will be as much as heavily subscribed as it was in the previous time, as even the foreign investors are already existing a lot of their positions in the market.
And about looking at the more medium-term approach to liquidity, first, before we get into medium term, I want to get your thoughts around the impact we're seeing of the bond auction settlement on liquidity today, and then more or less get your thoughts around what we can expect down the line in the medium term for liquidity.
Okay, for the medium term on liquidity, given the bond auction settlement and also the NTB settlement that is coming later this week, we expect the market to sink further into a repo. We already saw that the market has gone into a repo from Tuesday, declining by about 380 billion in the market. We already had a repo of about negative 207. In the market, we expect it to go further down. The bond auction is going to hit us with another negative 25 billion. That should seek the rates further. And given the MPC hike and the MPR rate by 50 basis points, we expect the OPR and the overnight rates to go a bit higher.
Yeah, because still on that higher interest rate environment here, I'd like to get the likely impact for your yield expectations for the rest of Q3 for both bonds and T-bills.
For both bonds and T-bills, investment will be expecting a higher yield on returns given that. So that's why we're expecting the marginal increase in the Treasury Bills auction that will be holding today, somewhere about 21.5%.
All right, thank you so much for your time today. Kinskin Ukeje, Treasury Team Member at Access Bank.